Welcome to Biztech's Inside Trading Show. This show is all about trading. Every week we meet and discuss what trading is about and what are the required habits of a successful trader. We will also share trading ideas and themes. Really, it's all about helping you to make money. Now, with me, as always, is my co-host, Phan Vee Leung. He's the founder and CIO of the Track Record Trading Academy. Now, V, welcome to the show.
Thank you. It's good to be back. Let's talk about trading.
Now, speaking of trading, our trading tip for today is really we're going to start from the Oracle of Omaha, Warren Buffett. Now, he's recently had his annual report. You have some key takeaways out of that in terms of trading tips. What did he say?
Cool. It's his annual report. His commentary is always very interesting. But today we're gonna talk about what he always holds to be true for the stock markets, right? He says the stock market is a game where no called strikes, meaning it's unlike baseball where if a good pitch comes along, if you don't take a swing, then it's a strike anyway. So you 3 times and then you get struck out, right? You 3 strikes and you're out.
Yes.
Whereas in stock markets, even if there's a good opportunity, you're not comfortable with it, you don't know enough about it, it's okay to not take a swing. So that means you have infinite amount of time, of course, within your lifetime, infinite opportunities that will come your way, and you can always take a swing only when you're very comfortable with it, only when it fits your time horizon, your capital requirements, and your expertise and your knowledge about the markets, right?
Now, this is very different from normal investor sentiment, isn't it? Because basically, a lot of time people say, hey, my friend is doing this, my friend is doing that, so I also want to follow.
Yes, exactly right. Yes. So that is essentially our basic human instincts of not wanting to miss out, right? It's the fear of missing out, right? FOMO, right? And this is very, very prevalent these days in the world of social media. You see somebody doing something really cool, then you want to be involved, right? And you're exactly right. I think many of us, especially retail traders, investors, we give in to the fad or the hot tip that your friend has about some other friend doing something, right? So and the media doesn't help as well, right? The mainstream financial media, they have this exciting background music that when they're talking about markets, it's like something is moving, something is happening. Then they have these sound effects that, oh, you got to get involved, right? And it's all geared towards creating activity, right? Creating towards the sense of excitement that you have to not miss out, you have to be involved. But as you said, the Oracle of Omaha says, right? And he's the most successful investor of our time, and he's exactly correct, right? Just you do not need to take a swing unless you're very comfortable with the risk reward profile of the opportunities that are coming by.
And you know what, V, he's been doing this for years. So a lot of, and this is professionals and non-professionals aside, have been saying, hey, Berkshire Hathaway, his primary vehicle has been accumulating cash like you wouldn't believe. And he's sitting on a lot of cash. But he has started to deploy some of that cash recently. He's bought into oil and gas last year. And this year, he actually bought and expanded his portfolio into the Japanese market in far more detail by buying the 5 Sogo Soshas, or what is known as trading houses in Japan. Can you tell us a little bit about that and some of the clever things that he's did that perhaps people are not aware of?
Yes, I think that is a very significant thing. It happened a few more than a month ago, I believe, and he made a trip to Tokyo to meet up with the head of all these companies, right? And it's very interesting how he is financing his purchases of the stakes in these companies. He is issuing yen bonds, right? And you said it yourself. He has a massive cash pile sitting. And why is he issuing yen bonds? In layman terms, issuing yen bonds means he's borrowing yen, right? He's borrowing.
Yeah, he's borrowing despite the fact he has tons of cash.
Correct. Despite having tons of cash, he's borrowing. I think that by itself is also a view that he has for the longer term, where yen interest rates cannot remain at these low levels for years and years, right? Given that now inflation is quite apparent in Japan. Of course, he did it ahead of the new Bank of Japan governor taking over the committee, but it created rumors then that maybe he thinks that the exit out of ultra low interest rate policy is imminent. But I think his time frame is not the average trader's time frame, right? It's not the average investor's time frame of 3 weeks or 5 months, right? He's looking at it for the longer term. And as you said, these five big companies, huge conglomerates, they are doing well. They are generating cash, and he is borrowing at ultra low interest rates to have a positive carry trade. That means he's borrowing low interest rates and he's receiving dividends and return on equity that's higher than his borrowing interest rates. So I think that is a great trade in the longer run as well. And if eventually the Bank of Japan will have to exit ultra low interest rate policy when inflation becomes too high above their inflation target.
So essentially he makes money in a few ways, right? One is the interest rate spread between what he borrows and also the dividends that he gets. So that's one way he makes money. The other way he makes money is, of course, in the long term in terms of capital appreciation on those equities, that those five so-called sochas that he buys. The other way that he will make money, obviously, sorry, could you tell me what other ways? It slipped my mind right now.
When interest rates spike higher, when the Bank of Japan exits the interest rate, the ultra low interest rate policy, when they stop buying their massive amounts of Japanese government bonds, you will see borrowing interest, the interest rates that prevail in Japan spike much higher than here. So as much as you've seen in Europe and US when the central bank started hiking interest rates, and then he can always retire his bonds. He can buy back the bonds that he has issued. So it means he's paying back all his loans, right? If he's borrowed at, let's just say, for example, he's borrowing at less than 1%, when interest rates go to 4-5%, he can buy back all these loans at much cheaper levels, right? It'll be like 20-30% cheaper than. So if he borrowed $100, he can pay back only with $70, he can retire the loan, right? So that's a great proposition, right? You're borrowing at low interest rates, and if interest rates prevail at these low levels, the companies, the conglomerates will continue to do well. And if interest rate spikes higher, he can retire these loans at a much lower, much lower nominals, right? He can just pay back the loans and enjoy the difference, the difference in the spike and where he borrowed from.
Also the other way, and correct me if I'm wrong, that he makes money is because he's borrowed in yen, in his own portfolio itself, it's valued in US dollars. So when he reflects the value, if the interest rates, if his thesis is correct and the interest rates are going to go up, wouldn't then his holdings in dollars then be reflected if the trade against the yen, the US dollar yen trade, goes in favor of the yen?
Yes. So his yen assets, right? So he's not borrowing everything. So he would be having yen assets as well. And then when interest rates go higher, the yen will strengthen, and then in US dollar terms, it will rise in value as well. Yeah. So you're absolutely right. He could be long yen assets, and then he will benefit from strengthening in the yen.
Now, so, on that note, that's quite an amazing trade when you think about it. And let's talk about a trading idea with multiple upsides along the way. Before we leave, V, any final thoughts before we end today's Inside Trading Show?
I guess that's it. So to summarize, it is that there will be many opportunities in this world of investing in stock markets, in whatever markets they're involved in. Do not rush into things. And I think we are talking about this now because in the last few weeks or so, markets have in the media has been filled with a lot of I guess complaints as well as commentary that the markets are range bound. Where is it going to break next? Is the Fed going to hike interest rates further, or is it going to be pausing? I think we are at the juncture where we are very close to the end of the hiking cycle for the US Federal Reserve. There will be many opportunities that come. There's no need to rush in right now so a lot of reports I'm reading is like, oh, if this is the end of the cycle, then asset prices should be going up soon. But there's no need to rush in, right? Because if it is the end of the cycle, asset prices is going to go up. It's not going to be happening in three days or 3 weeks, right? It's going to be a long period of time. And there's still, the jury is still out about whether inflation is going to be harder, the slowdown is going to be a hard landing or soft landing. So that's a lot of things in play. We have the debt, US debt limit to be worried about as well. So this is a time to take stock, take a step back, have a bit of a chill, right? Relax, no need to rush in, because opportunities, when they come, they will come fast and hard. For now, it's a no call strike game. Be ready keep your powder dry, be ready for the opportunities in the weeks ahead.
And that's a key takeaway. Keep dry powder and get ready for the opportunities ahead. That's it for this week's Inside Trading Show. Vee, thanks for coming on the show. We've been speaking to Phan Vee Leung. He's the founder and CIO of Track Record Trading Academy on Biztech's Inside Trading Show. I'm Brian Fernandez. This show will be on our website, www.biztech.asia, as well as our syndication partners, TV stations, radio stations, and websites. Thanks a lot for tuning in.